Good morning, traders. It's 8:01 a.m. Chicago time on the 15th of December 2015. Thanks for joining. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not indicative of future results. Fair amount of news overnight. Well, the big thing today is that the Fed starts its two-day meeting deliberating over what the policy going forward will be. The Fed's still expected to raise its benchmark interest rate for the first time since June 2006. Market participants will be on the lookout for clues as to the pace of the rate hike cycle. The market's pricing in a 78% probability of a 25 basis point increase at Wednesday's meeting tomorrow, and a 33.6% chance of an additional 25 basis point hike in March. So, big day tomorrow. Sweden's Riksbank held its interest rates unchanged, its repo rate unchanged at negative 35 basis points. The Swedish krona is stronger by 0.8%. Let me turn down this news feed. Germany's ZEW economic sentiment climbed to 16.1 in December from 10.4 in November. The number is above the 15.2 expected. This was the highest, the first improvement in 3 months. Expectations survey 16.1 versus 15.0, second month of improvement. The UK narrowly escaped deflation with its CPI release this morning, came in at 0.0% versus negative 0.1 estimated. Year on year, 0.1 in line with the estimate. Other than that, we have U.S. November CPI coming in at 0%, CPI ex food and energy at 0.2 in line. We did get Empire Manufacturing at negative 4.59 versus negative 7. We're seeing some movement in crude oil overnight. Didn't see any news items on it. For today, our expectations as far as releases are concerned, we don't have anything on the, well, let me see. Just 1 second. Sorry about that. Okay, so today we're looking at NAHB Housing Market Index at 9 Central, 10 Eastern, expecting 63. And then total net tick flows, long-term tick flows at 3. Those are low importance numbers. As far as speakers and other events, we don't see anything. We have Bank of Canada Speaker Poloz at 10:45. And Australia's Reserve Bank of Australia at 5:30 Central this afternoon. Other than that, there's really nothing on deck. Let's look at the overall picture, technical picture. For those who were here yesterday, you recall the expectation was for the market to test lower to take out this high volume node here. Let me clean this chart up a little bit. There we go. Actually, I'm going to remove this developing point of control. There we go. So the prior day left this high volume node at the low of the day with a point of control at the low of the day, a weak bottom. So yesterday's expectation was for a rotation down and to take out this 98.50, but overall expecting the market to push up, to start pushing up. The first target was 2019. 2019.50 was the overnight high. The next level up was 26, which is tonight's overnight high, I believe. Oh, it's 33. So we got through the 26 and we pushed to 23. So yesterday the big thing I was pushing through was that the market from an auction perspective, from a volume profile perspective, was heavy on the short side, has sold off heavily, and the sell-off has not been one that is it's more of an emotional sell-off. When you have a profile that looks like this, where you have these multiple distributions like we saw on Friday, this type of profile, there's no smooth migration of value. There's no development of value down or the value area. This is more of an emotional push, very jagged trading, two-way fight. Yesterday built a much more smooth profile. Yesterday definitely had some long-term players in here. We saw what looked like a spike up to 2014 in the morning on no news whatsoever, and we were looking for this. Looked like an excess high, but given that the way it behaved, the way it spiked up and came off, it was looking still for a retest of this candle. And we got it in the afternoon. So the overall idea yesterday, the Hypo One idea, was to test below the prior day's low to continue the auction from Friday. But overall, I cautioned shorts and had said that we are likely to start pushing up, to rotate and start pushing up fairly strong. And that came in pretty late yesterday. A nice rotation up, a continuation rotation, and it looked like we had some balancing on the close. This trade continued overnight, and we're back now trading at 2031. I'm going to show you what has happened in the overall picture. So let's go to a 240 minute just to bring in the big profile. Okay, so essentially what we've done, as I went over yesterday, we have traded the heck out of this balance zone above. We tested it very cleanly and sold off. We pulled back and then we gapped down, and then we had a continuation. What we did is we moved through these areas. We've rotated through these low volume nodes and into the next high volume area, and the next high volume area, and the next high volume area, and we've tested below the balance area low at 98.50 and have come back in. So the idea yesterday with that 19 quarter was for us to come back in, and as soon as we push through this low volume node down here at 04, that we would get 19 and a quarter. We didn't quite get there, but we got it overnight. We had it overnight yesterday, and we have it or over the weekend on Sunday night, and then we had it overnight last night. And then we're likely to chop around in here, then push through to the next high volume node, which is in the 2040, which is what I mentioned yesterday as a key target above. There's a fair amount of resistance in this area here, the 2040 area. The sellers are going to want to defend that area on the first try, and that's basically where we're headed. We're trading 2030 with a high overnight of 2033 and a quarter, so we're pretty close. We're only 7 points away from that next target. So right now where we are, we have that 2026, 2024 LVN below us and are in this zone. So essentially today we're going to start out by re-auctioning this area here. A break above 2044 is likely to put all shorts in at risk all the way back up to the MC point of control 2072. So word to the wise, basically that's how the auction is playing out. I expect that today, so that's the big picture, right? This is basically what we're auctioning right now. We're moving from low volume areas just as expected, just as the market has done for probably hundreds of years. It just goes from areas where there's no volume, where the price is considered unfair, to areas where a price is accepted. We test, we see if there's more participation to be had by buyers or sellers, then the market rotates accordingly. We cannot tell what it's going to do when it reaches a high volume area, but those are key targets, and it's just the market. That's what it does. It It has tested lower. It gyrates up, it pulls back, it pulls to the next HVN, it chops around it, usually pulls back, goes to the next LVN, pulls back to the HVN, pushes through, pulls back to the LVN, and then bounces up to the next HVN, bounces around because that's a high volume area, pulls back a little bit, pushes to the next LVN, bounces back to the HVN, pushes through, pulls back to the LVN, blah, blah, blah. Those are your balance, imbalance, balance, imbalance cycles. That's auction theory in a 300 word paragraph right there. And that's basically what's happening here. We've tested below the balance zone, and we found those buyers that I talked about yesterday before the open. It did happen, and we're continuing higher today. So back to the 15-minute. It takes a second for these charts to switch because I'm retaining a lot of tick data. So let's extend this profile out to encompass yesterday. So let's move that to the 14th. Okay, so essentially what we have today is the market has driven to fill the gap zone. So we have a gap zone here from 2025.50 up to 2035.75. This area here is a gap zone, and that's where we are now. So we're opening inside of a gap zone. If we take a quick glimpse at the overnight session to see what clues we might have here, you see during we'll see during the Asian session it opened, pulled back, consolidated, and then basically took off. In the European session, we have a nice big distribution in the middle. The market's liking these prices. Remember, the 2025, 2026 area is important. Here it is, the high volume at 2025. It's overnight volume, so it's not a huge indication. But overall, the market is opening right up against right into the LVN zone, and it's trying to push higher still. There's a weak high here. You can see that the volume is carried all the way up through the high value area, pushing all the way to the high. This is a weak high. The expectation is this 2033 quarter is probably going to go either before the open or shortly thereafter. But we're still opening in a gap. We're opening in a we're gapping up. We're opening in a gap zone. Let's clean this chart up. We're opening in a gap zone, and we have to respect the fact that the market now has an incentive to push higher from here or push lower from here. In other words, the market's out of balance. This is an imbalance condition that we have here, and it's really a coin toss chance which way it's going to go. So on the open, there's not a very high probability of one thing happening over another. On the open, this could push the overnight high and return back to the 2019 area before it chops and then continues higher, moves to that 2040, 2044 area as discussed earlier. But also because we're opening in a gap, we're gapping up, we're in a gap zone, there's also a high chance that this is likely to chop very tight on the open. We're not expecting anything huge today as far as economic data, so the market can take its positions early if it wants to, and then it could drop right away. So those are the drop scenarios. Of course, the same thing can happen where it chops on the open, cannot find sellers, motivated sellers. Sellers are likely to start running for the hills as discussed yesterday. We are seeing that plan still come to fruition here and pushing forward. So sellers might get squeezed, and you might see this thing push higher. So this looks like a football chart. Anyway, so basically, what we have here is the thing you need to focus on right now is that the market is opening in an imbalanced condition. This means that whatever happens from here is going to be done in a strong push. The normal auction procedure is to chop and then get responsive selling in this situation, retest the prior areas of acceptance before it moves up. That is the normal behavior of an auction. However, we're opening in a gap zone, as I said, and we are in this upwards push. Right now, we're in an upwards rotation. We have tested below balance. That's the big contextual piece. That's what I call the big boulder that is anchoring your foundation right now, is that we have tested below balance, the big picture balance, and we're starting to rotate up. Don't forget that. That's a big piece of the puzzle right there. We've started to rotate up, and it's likely to continue rotating up again into the 2040 area. That's the next key high volume area to be tested. What am I leaving you with here? A lot of uncertainty on what's likely to happen. I don't have a primary hypo that has a high probability over another. I'm basically going to sit and wait to see which side gets the bigger rotations, which side ends up dominating. A quick look at Crude. Crude has pushed to 34.53 yesterday. As expected, it has also started to bounce, and it's in a corrective mode right now. It's likely to continue to push. Yesterday, I was looking for a pushback into 36.15, and it got there much faster than I can get on it, to be honest. But I was looking for a retest of this balance zone here once it got into yesterday's range. So I was looking for this LVN, and it got there. I didn't do anything with this trade, and guess where today's low is? Today's low is against that LVN. So what we've done is we've pushed through, pulled back to the LVN, balanced against it, and are doing the continuation up. So crude's in a corrective mode right now, and it's also in a slightly imbalanced condition. Anyway, I'll leave you with that. I know that's a lot to share. Tomorrow's the big day. Tomorrow's the FOMC day, expecting very high volatility. I would, if you have a weekly loss limit, I would save some bullets for tomorrow. Come in fresh, and tomorrow's the day to take risk. Take care.